Hello, everybody, and welcome to another installment of our Southern California housing market update for November 16th, 2021. I'm your host, Stephen Mead with Domicile Real Estate for people who love houses. Fall is kind of an interesting time, especially this year, because I think we're in a situation of what I call somewhat of a reactive market. And what I mean by a reactive market is it's one that seems to be set off by little things. For example, interest rates actually moved this week, and we can actually plot that result in sort of our marketplace. So kind of a couple of interesting things going on. I don't want to harp too long. I'm just going to jump into it and show you guys what I'm seeing out there. So let's start off here. Yeah, let's see, there we are. There are our slides. Oh, you know what? I can actually make this full screen. Let's do that. All right, there we go. So let's go back to the beginning here. So a couple things that are happening. If we're looking at our active inventory, and I've been harping on this, we are already at a point that is the same as we were at the beginning of 2021. So we're basically a month ahead on this inventory drop. I think next year is going to be a very rough year for inventory, especially in the spring. I don't think it's going to be easier than this year. I think it's going to be worse. If we are looking here at our under 1 million, that's true. But if we look here at our 1 to 2 million, inventory is actually already significantly worse than it was at the low point at the beginning of this year. So in that luxury market, I'm not expecting anything to be any easier over there. Now, this kind of gives you an idea of what's in our market. Our new listings is a bit of our supply. Now, something interesting has happened is that we've seen these numbers flatten out a little bit. We were kind of having a downward march. Whether this is just a continuation of this slope here or whether this is an actual flattening, I'm not sure. We're actually having still pretty decent new listings coming into that marketplace. The problem is, if this is our supply, our demand has not weakened in quite the same way. And if you see this, like we actually have a little bit of a rebound going here on our demand under 1 million, and demand is as strong as it ever was in our $1 to $2 million price category. And when I look at this, I think that, we have been so long in sort of a perennially under inventoried or inventory constricted market. I think we're actually forgetting what a normal market even really looks like. Even now we're seeing some bizarre consequences, right? Like we have market segments where there was one house for sale and it's still a little slow and weird. And then other areas where there are 10 houses for sale and they all go under contract the same weekend. So it's kind of a little bit of a bizarre market. And this is definitely one of those moments where if you're a buyer or a seller, you really want to take the time to understand the exact market segment, meaning not only property type and price range, but also geographic location of the properties that you're interested in. Because it really makes a difference and it's really not homogeneous at all. We're seeing variances all over the place. Let me go back to our screen share here. There we are. Let's see. Nope, not able to get that. So let me see what I am doing wrong on that front real quick. Just bear with me a second here. We're going to get this stuff all fixed up for you. Occasionally, I have too many windows open. And then when I do that, that's what actually makes it a little bit tricky to get the screen sharing right, as it were. But I think we're going to be able to do it for you this time. So let's try this again, going back to our stats, and we'll do that. I think I've actually gotten pretty good at this. There we go. So once again, these are our escrows, our new contracts. Like I said, look at this. We see a little bit, the bleeding is stopping, but the problem is while the bleeding is stopping, we actually gained a little bit of ground. And what happens when we reconcile that supply and demand together? Look at what we see. We see a world where 1 to 2 million has hit its highest point of absorption rate all year long is right now, meaning more people are going under contract on homes than there are homes coming online in the marketplace. And if you look down here at our entry level market, it too is near the top of where it has ever been this whole year. So that relationship of supply and demand is still off kilter. And I think what we're seeing happening, I think the interest rates really are explaining some of this kind of late fall high demand. But before we talk about that, we're going to talk about prices a little bit. This is, again, 4 to 6 weeks ago pricing. If you look in this luxury market, we have a little bit of a jump. Now, our sample size isn't as big, but note, this is pretty much, I think this is close to a new high point, even with this jumping around. Looking at our median, that is also kind of taking this gentle upward slope here through the fall. And then our entry level market, which has also done very well. Slight dip this past week, but I mean, these things do move around a little bit. If we take another look at demand, right, it's this measurement of the percent that's still active after 14 days. So we look at everything that came on the market in the last 14 days, and we say, well, how many days are still active or coming soon status out, from the last 2 weeks. And when this number starts to dive, it means the market is heading more competitive. And what I find interesting is for our 1 to 2 million, this past week is the most competitive it has been since back in May. And if we look at our under 1 million, this is the most competitive it has been since about the middle of July. So really kind of interesting to see this sort of a thing happening, basically a week before Thanksgiving. That is very unusual, very surprising. If we look at our close to list ratio, that's another one. I think I said on multiple occasions, I would have expected this graph to kind of tilt downwards back to 100%. Look at where we were at the end of last year, kind of hovering down here. Look at where we are in the middle of November, all the way up here, and it really hasn't been changing very much. It's kind of a steady state in the market on that. And I find that interesting that there almost seems to be this psychological mentality that we pay over list price now. I'm going to go off share a second because I want to talk about something funny. So if you're in Southern California, that seems kind of like an odd idea that we're just perennially paying more than list price. But what is kind of interesting about that is that has been sort of a market tradition in the Bay Area. It's been routine that if you wanted $1.5 million for your house, you listed at 1.3. And everybody understood that 1.3 really meant you wanted 1.5. So I think it's kind of interesting how that became prevalent, and it looks like that is sort of spread down here in Southern California as well. Personally, I don't like it. I like it when homes are priced right about where everybody thinks they're going to go for. I think that's fair and honest. I think kind of playing this game is sort of interesting. Days on market. Now, this one I think is kind of funny. We did see this rise a little bit in both of our pricing categories, but I want to make sure people understand, relatively speaking, what this means, right? I mean, look at where we were at the end of the year. We were almost 40 days for our under 1 million. We are nowhere near that heading into the middle of November. We were 55 days, right, for our 1 to 2 million, and we are still under 30 days. I mean, these have a long way to grow to look at all like they did last year. Also, I want to talk about our affordability, right? And I keep harping on this because I think this is so important to understand in the market. This is really what ultimately sort of drives prices and price growth. And what we see happening here is as interest rates have eased a little bit, this affordability number, I mean, really, how remarkable is it? We see this march up in basic pricing, right? The payments are going up. Then they reach this kind of market equilibrium, and they've really just been hanging out, maybe a slight increase over time, but not huge. I mean, this is the one thing I think that gives me a lot of hope for sort of the stability of the market that we're in. But this inventory crisis thing, I think, is getting a little bit old. Here are our prevailing interest rates as we head back down towards that 3% mark. So we had kind of another little hump here, and then a little bit of an easing. Really not terrible news if you are a buyer. In fact, it's great news. And if you're a seller who is hoping to buy something else, this is also great news for you. Well, that's all we got this week for you. As always, questions, comments, we absolutely love them. If you are looking to buy or sell a home in Southern California, especially Los Angeles and Orange counties, we would absolutely love to help you. And then finally, do not forget to like, subscribe, and hit that notification bell so you can see our videos when they come out. Our next video will be our architectural video coming out on Thursday. Thanks so much for watching, everybody.